Hello, welcome to the Wealth Starting Line. Don't forget to like, comment, share, and subscribe.
All right, let's talk about a trading formula that, on paper, looks like an absolute killer. It combines 3 classic tools and promises a super high win rate. So, why do so many traders get burned by it? That's what we're going to break down right now.
I mean, check out this claim from our source, Trading Lab. They're saying this MACD strategy is one of the highest win rate strategies you can possibly do in trading. Bold words, right? And look, the MACD is a legendary tool. Tons of traders swear by it. But if it's really that good,
then why do so many people lose money with it? That's the million-dollar question, isn't it? And that's exactly what we're going to solve today. See, the MACD is an amazing tool, but using it all by itself, it's like trying to build a house with just the hammer. You're missing some crucial pieces.
So here's our game plan. We'll start with the MACD itself, the good and the bad. Then we'll add our first critical filter, the trend. After that, our second filter, the price map. We'll put it all together into the complete formula, and then we'll top it off with an advanced trick to really take it to the next level.
Okay, first things first. Let's really dig into the MACD. What makes it so great, but also what makes it so dangerous?
So what the heck is it? Well, MACD stands for Moving Average Convergence Divergence. In simple terms, it's just an indicator that looks at 2 moving averages and tells you how they relate to each other. Its whole job is to show you when a trend's momentum is picking up, slowing down, or about to change direction.
it looks a little complicated, but it's really just 4 parts. You've got the blue MACD line and the orange signal line. Honestly, those are the 2 you'll be watching the most. The histogram, those bars in the middle, just shows you how far apart the 2 lines are. The bigger the bars, the stronger the momentum. And that line in the middle, the 0 line, that is absolutely crucial for this strategy. Remember that one.
So, how do you actually use this thing? The most basic signal everyone looks for is a simple crossover. It's the bread and butter of the MACD, but you have to know the specific rules.
All right, listen closely. For a buy signal, you're looking for the blue line to cross above the orange line. But, and this is the important part, that crossover has to happen below the 0 line. For a sell signal, it's the exact opposite. The blue line crosses below the orange line, but this time it has to be above the 0 line. Why? Because that location tells you that momentum is just beginning to turn in your favor.
Okay, seems pretty straightforward, right? So what's the catch? Where's the problem?
Here's the thing. The MACD is a momentum indicator. It's like a sports car. It's amazing on a straight open highway. In other words, a trending market. But if you take that sports car off-roading into a choppy sideways market, it's going to fall apart. The context is everything.
And this is where traders get wrecked. You'll get these beautiful-looking buy signals while the market is still tanking. Or you'll get a dozen false signals back and forth in a choppy market, and you get chopped to pieces. The end result? Yeah, a lot of frustration and lost money. And this is exactly why we need to add some filters.
Okay, on to our first filter. This one is all about figuring out which way the river is flowing, because you never want to try and swim against the current.
And our tool for that is the good old 200-period moving average. Seriously, think of this line as the ultimate referee on your chart. It draws a clear line in the sand between a bull market and a bear market. Super simple, but incredibly powerful. And the rule couldn't be simpler. If the price is trading above that 200 moving average, we are only, and I mean only, looking for buy signals. If the price is below it, we're only looking for sell signals. That's it. Any signal that goes against that rule, we just throw it out. Instantly. And check out the difference this makes. On the left, you've got a textbook MACD failure. A buy signal fires while the price is clearly trending down. Ouch. But now look at the right. With our filter, we see the price is below the 200 MA. So that buy signal, we don't even look at it. We just saved ourselves from a bad trade, right there. All right, that's a huge improvement. We're no longer fighting the trend. But what about those annoying, choppy markets where you get a million fakeouts? That's the next piece of the puzzle.
Yeah, the trend filter is great, but it doesn't help much when there is no trend. To fix this, we need to stop taking trades in what I call no man's land. We need to trade from specific, important locations on the chart. Basically, we need to create a map.
And the solution here is good old-fashioned price action. We're going to look back at the chart and find the exact levels where the price has had a big reaction in the past. It's like finding the chart's memory.
These levels have names, support, and resistance.
Support is a price floor. Think of it as a trampoline or launch pad where buyers tend to show up. Resistance, on the other hand, is a ceiling. It's like a brick wall that the price has trouble breaking through, because that's where sellers are waiting.
And this is the secret sauce. We don't just jump on every MACD signal anymore. No, we are patient. We wait for the price to come to us, to come to one of our key levels. The level gives us the location, and then the MACD gives us the green light. Location first, signal second.
Okay, you ready? Let's put all the pieces together. This is the complete formula. Trend plus context plus momentum. A simple three-step checklist.
So for a buy trade, here's your checklist. Step 1, trend. Is price above the 200 MA? Yes? Good. Step 2, context. Has the price pulled back to one of our key support levels? Yes? Great. Step 3, momentum. Do we now get that MACD crossover to the upside below the zero line? If you can tick all 3 boxes, that's your trade.
And for a sell trade, it's the exact opposite, a perfect mirror image. Is price below the 200? Has it bounced up to a resistance ceiling? And are we now getting the MACD cross downward? If it's yes, yes, and yes, you've got your short setup. Now, getting in is only half the battle. How do you manage it? For your stop loss, you can tuck it just below the 200 MA on a long trade or just above it for a short. It gives you an extra buffer. And for your profit target, you want to aim for at least 1.5 times whatever you're risking. This way, your winning trades will always make up for more than one losing trade.
Okay, so you've got the formula. That alone is huge for consistency. But if you want to find those really grade A top-tier setups, there's one more layer we can add. This is the advanced stuff.
Look, the formula gives you a solid system. But this next technique, this gives you a real edge.
And we're talking about the power of divergence. If you can learn to spot this, it's an absolute game changer.
So what is divergence? It's when the price and the MACD are telling you two completely different stories. The price might be pushing to new highs, but the indicator is getting weaker. It's a massive warning sign that the trend is running out of gas and a big reversal might be coming. Okay, let's break it down. With bullish divergence, the price makes a lower low. But look at the MACD, it makes a higher low. That tells you the sellers are getting tired. Bearish divergence is the flip side. Price makes a higher high, but the MACD makes a lower high. That's your clue that the buyers are running out of steam.
Now, think about this. Put it all together. You're in an uptrend. Price is above the 200 MA. It pulls back to a major support level. And right there, at that exact spot, you see a bullish divergence forming. Then you get your MACD crossover. I mean, come on. That is the definition of an A-plus high probability setup. All the stars are aligned.
And that's really what this all boils down to. There's no magic crystal ball here. This is a system. It's a way of stacking probabilities in your favor by layering these filters, trend, location, momentum, one on top of the other. It's about playing the odds.
So think of this formula as your foundation. It's a fantastic starting point that gives you discipline and an edge, but it's not the finish line. The real secret to mastery is taking this, testing it, tweaking it, and ultimately making it your own. So the real question is, what are you going to do with it?